So, you've heard all about the AI gold rush, right? Everyone's obsessed with the shovel sellers. Companies like NVIDIA making those powerful chips. But here's a thought. What if the real money, the smart money, isn't in the shovels? What if it's in the mines? I'm talking about the actual physical ground floor that makes this entire revolution possible. Think about it for a second. What does this whole AI revolution physically run on? It's a really simple question, but the answer? Well, that's the key to everything we're talking about today. All that incredible AI, all those models, they're not just floating in the cloud. They have to live somewhere, right? They need a real physical home. So, what does that home actually need?
It really boils down to three things: power, and I mean a ton of it; space, just physical real estate for racks and racks of servers; and maybe most importantly, cooling. We're talking super specialized cooling to stop all that hardware from, melting. Take away any one of those, and the entire AI boom just stops dead in its tracks.
And that right there, that's the huge infrastructure problem nobody's really talking about. You can have the most powerful chip in the world from NVIDIA, but honestly, it's just an expensive paperweight if you don't have the right place to plug it in. And these chips have some very specific, super demanding needs that your average building just can't handle. Not even close. Okay, so this is a really important point. A traditional data center is like a family sedan. It gets the job done for everyday stuff. But what AI needs, that's like a Formula One race car. You need what people are calling AI factories. Think about it. They're built for what's called high-density power. That just means cramming way more computing horsepower into a smaller space. And to handle the insane amount of heat from thousands of these chips running 24/7, you need specialized, often liquid cooling systems. Your standard AC unit isn't going to cut it. So the billion-dollar question is, who's actually building these things, these AI factories? Well, this is where a company called Applied Digital, you'll see it as APLD, comes into the picture. And their strategy is brilliant. They've basically become the landlords of the AI revolution. Everyone else is fighting to sell the shovels, right? Applied Digital is quietly building the mine. So, what exactly do they do? I mean, they're the essential backbone. They build these highly specialized data centers that AI companies are literally lining up for. And get this, they're a preferred NVIDIA cloud partner. That's a huge deal. Not many companies get that stamp of approval. But their secret sauce is even cooler. They use their own special waterless cooling tech, and they build their sites near something called stranded energy. Basically, it's cheap power in out-of-the-way places. This strategy gives them a ridiculous competitive advantage on cost. Okay, so a great story is one thing, but you always got to ask, show me the money, right? Do the numbers actually back this up? Well, in this case, the numbers aren't just good. They're not just showing growth. It's an absolute explosion. 250%. That was their year-over-year revenue increase in a recent quarter. Just let that sink in for a second. That's not steady growth. That is textbook hypergrowth. It's what happens when you're selling something absolutely essential to the fastest-growing industry on the planet. And if you're thinking long-term, check this out. They have a revenue pipeline of around $16 billion. And the best part? It's almost all from long-term leases. We're talking multi-year contracts that just lock in that revenue. It makes their cash flow super predictable for years to come. And you better believe Wall Street is paying attention. You've got big firms like B. R. Riley Securities and Needham slapping buy ratings on it, with price targets that suggest there's a lot of upside from here. The message from the pros seems pretty clear. This thing has room to grow. But analyst reports are one thing. I always find it more interesting to follow the smart money. Where are the huge institutions, the firms that manage literally trillions of dollars, actually putting their cash? Well, take a look at who's buying. We're talking about the biggest names in the game. BlackRock, Vanguard, Jane Street. These guys have all been building up their positions in APLD. When you see the heavy hitters all making the same move, you really have to pay attention. They're not just talking, they're voting with billions of dollars. And all of that big-time buying creates this really interesting effect in the market. It's called an institutional support floor. Sounds complicated, but it's not. All it means is there's a price level where these huge funds bought a ton of shares, and you can be sure they're going to be motivated to protect that price. So how does the support floor get built? It's pretty simple, really. First, these giant institutions start buying up massive blocks of shares, usually trying to keep it on the down low, all within a certain price range. So that price range becomes this invisible floor. And if the stock ever dips down to that floor, well, a lot of times they'll just step right back in and buy even more to defend their investment. It's like they're putting a safety net under the price. And the really key thing to understand here is that this all happens behind the scenes. They use these things called block orders to move huge amounts of stock without setting off alarms all over the market. It really is like that old saying, right? Real tacticians move in silence. All right, so let's zoom out and put all the pieces together. What we have with Applied Digital is a really compelling long-term play on the actual foundation of AI. But hey, no investment is a sure thing, so it's super important to look at both sides of the coin, the good and the bad, the bull case versus the risks. So, the bull case? It's pretty powerful. You've got that multi-billion-dollar backlog locking in future revenue. You have these critical partnerships with giants like NVIDIA and Supermicro. They've already proven they can build these massive projects. And, of course, they have the backing of the biggest investors on the planet. I mean, they're sitting at the perfect crossroads of energy and AI.
Okay, but what about the risks? You have to consider them. The big one is something called customer concentration. Basically, a huge chunk of their money comes from just a handful of clients. Now, those long-term contracts help a lot, but if one of those big clients were to ever walk away, yeah, that would definitely hurt. And of course, the stock market's going to do what the stock market does. It can be volatile, and APLD is no exception.
Ultimately, when you put it all together, it leaves you with this one big, fascinating question. In a world where everyone is frantically chasing AI gold, is the smartest bet on the person building the mine, the one who wins no matter who strikes it rich? It's definitely something to think about.